Hi, Leah. Thanks so much for your question, and it's a good one. So you've got $500,000 that you'd like to invest, and you need to rely on some income, and you're thinking about whether it's shares or property. From my perspective, it's shares, and the reason for that is that if you want to enjoy some passive income from the portfolio, then property is probably not the way to go for a couple of reasons. Firstly, $500,000 really restricts, what sort of property you can buy and the location, and therefore the quality of that property. So I think you're going to have to make some reasonable concessions with respect to quality to be able to buy an asset for, in terms of total cost, less than $500,000, which means you need to purchase for say 450 or around about that sort of mark. Secondly, the holding costs associated with property are significant, which eats into the rental income that you might receive. And those holding costs can change, right? We can have maintenance requests, those sorts of things. Things can break down with the property, and that's going to impact on your cash flow, your passive cash flow. So that's something that you don't want to have. The benefit with shares is that you can invest it in a way that's going to generate consistent and predictable levels of income. So, for example, the ASX 200, and you could invest in something like A200, which is an ETF that gives you access to the ASX 200 index. It's consistently paid 4.5% in terms of income plus franking credits. So if you gross it up at sort of around 5.5%, 6% per annum, that's been consistent for a long period of time. Now, there might be some volatility, obviously, in the index amount. So the value of your investment might change over time or from time to time. But the income's pretty consistent off the index. You don't have any costs associated. I mean, there's small costs associated with the ETF, but you don't have any potential rising costs or exposure to rising costs like you do with property. So from my perspective, not knowing your situation, of course, so this is not personal advice. I would be leaning towards investing in shares rather than property for all those reasons I've stipulated. Hope that helps.